So I have great pleasure in introducing Jonathan Satchell to give you an update on Learning Technologies Group for the AGM. He's been CEO of LTG since flotation of 2013, but of course, Jonathan, you've been in charge for much longer than that, really, back in the days when this company was known as Epic and you bought it out as part of an MBO. Do you just want to take us through some of the history of LTG, please?
Yes, thank you. Morning, Anna. My chairman and I bought it in 2008, ironically enough, just at the beginning of the last major crisis in the world. We knew it was a turnaround situation. It had been market leader. It makes custom e-learning programs for large corporates and government where they need to train a specific topic to their learning audience. And we spent a couple of years going through sort of tough times in the global financial crisis, but emerged from that stronger and more efficient, and started to grow quite nicely again from 2010-11. And we decided it was an appropriate thing to begin to try and consolidate what is a very fragmented industry, which was the reason that we chose to go the AIM listing route in November 2013.
Okay. I think we bought shares in 2015, actually, at the time of the acquisition of Ucleo, which I think you were doing to help build up some decent presence in financial services. Do you want to talk a bit about the end markets that you service and how that's changed over the time?
Yes, and goodness me, it's changed substantially. Since 2016, our acquisitions, in fact, immediately after Ucleo, the next one have been predominantly American, and so we have added an enormous North American customer base. And in terms of segments and sectors, I can tell you, because we look at it a lot at the moment for obvious reasons, we're 11% exposed to retail, hospitality, travel. Our main sectors, about 20%, are financial services and insurance and banking. And then we're still quite prevalent in government and health services. And then some other esoteric sectors like sort of chocolate manufacturers, luxury goods, and we still have quite a presence in automotive as well.
Mm-hmm. Okay. And what are given the situation we're going through at the moment, what are your customers saying to you?
Oh goodness, it's a wider variety. Clearly, organisations like British Airways are struggling at the moment for obvious reasons. They have curtailed a project for the time being. They've worked with us for a couple of decades, so we've been very understanding about that. Whereas other organisations are using our platform very much more than they have been in the past, because of course, with a predominantly remote workforce, they're looking for things that they can be doing that they can't do necessarily in the office, or replace work that can be done in the office. So we've seen about a 25% increase in our hosting stats of the usage of our platforms. And of course, the interesting thing about this crisis is that all the mandatory aspects of learning and filing diversity and equality reports and so on, none of that stops. So organisations need to continue to do what they've done before, which is, of course, very helpful for our business.
So I think what you're talking about there is British Airways, curtailing a project. So how does it split out between those kind of project-based revenues and the ones that are more repeatable on your platforms?
So we're very fortunate, not by design to a certain extent. We knew that when we started the group and came to market, we wanted to build a broad range of capabilities. We started with this ability to make content for our customers, but clearly that's a single contract project type business. And we knew that the important aspect, if we were going to capture the market properly with a broad range of capabilities, was to be able to distribute that content and monitor its usage. And that means you need to have platforms. And the software platforms are on a very different commercial model. They are SaaS-based, software as a service, and of course that means recurring revenues on a subscription type. So 75% of our business is subscription revenue, 25% project revenue. We've seen a small drop-off already in our project revenue, not dramatic yet, but we are seeing a drop-off in sales. So our order book is still quite substantial. Occasional projects like British Airways have cancelled, but most are continuing. And therefore we see revenues declining slightly in Q2, but not dramatically. But we will not sell as much, we think, in Q2 to replace that order book. So we think Q3 and 4 will be significantly down on prior year, but for understandable reasons. Our subscription business, very different. One, we're not seeing any drop off in retention rates. Companies that have our platform are continuing to have our platform. We do have a couple of conversations that have gone on with larger customers. These are large global corporates that are saying to us, we're going to renew our subscription, but we want to discuss payment terms with you. So, that whole aspect of liquidity goes right the way in our experience across the spectrum of organizations. Everyone is thinking about their cash and their own cash preservation.
So they're trying to push out the number of days that they have to pay you back.
Yeah.
And are they also trying to put any pressure on the actual pricing itself?
Interestingly, not. We're competitive in our pricing anyway, but payment terms have been the biggest consideration. And we do think we'll see a small diminishing of revenue in our subscription business, mostly because 90% of our businesses, the commercial terms are based around the total number of users or learners that are using our platforms. And sadly, we do believe that the world of work is contracting at the moment. So there will be a smaller amount of employees in each of these organizations. So we're assuming potentially a 5 or 10% decline in the renewal rates are based on the number of learners or workers that people have.
And how much flexibility do you have to adjust your cost base faced with that?
So in our content business, we have a lot of flexibility. We've already switched off all of our contractors. They're the flexible element of our production workforce. That has saved us a significant amount of money and also extended the time that the order book is being burnt through by our staff. So it's healthy in every respect. In our software business, we have less control over. There's more of a margin drop through, if you like, from revenue diminishing because we have a relatively fixed cost base. I'm certainly not prepared to underinvest in research and development. It's just short term. I think that's a very short term attitude that would be inappropriate. And our hosting infrastructure, whilst it flexes a little bit based on the size of the amount of hosting you've got, there is an underlying cost there that is unavoidable.
Yeah.
So yes, revenue decline in our subscription business has more of a drop-through effect, but we've reforecast all of our numbers, and we're comfortable that our profits are not significantly affected by this. Partly because a number of other costs are naturally being curtailed by the crisis. We spend an awful lot of money on trade shows every year to engage with prospects and our existing customers, and we're clearly not doing any of those from March of this year. We've actually made a conscious decision. We are not sending our staff to trade shows for the rest of this year. We don't think it's appropriate. So that's a multi-million-dollar saving just in that alone. Although we've withdrawn guidance formally, as I think most companies are at the moment, we are comfortable that our reforecast still shows very significant profitability for the business.
And so do you think things like the marketing channel of trade shows, do you see that disappearing forever? Or do you think that, are you really seeing any sort of fundamental changes to the way that you think your company is going to operate?
I think there will be. I think it's too early to say. We're seeing a few digital substitutions for trade shows. Do bear in mind, trade show organizers own that database of prospects and can create that connection between us and our respective customers. I see meetings-based events, speed dating style events where you have arranged meetings and people move on from one room to another to meet different people. I see all that sort of thing beginning to become more prevalent. We're just going to. I just can't see a situation where you're on a big exhibition hall and there are stacks of people walking down aisles, not socially distancing for a long time. It just doesn't feel like it's going to be possible. And our marketing department, as I'm sure many are around the world, is concentrating on what we can do about that.
Yeah. Okay. Let me think. Well, I was going to also ask you about what you're seeing. It's been a buy and build story, really, Learning Technologies Group. You've made lots of acquisitions in the past and integrated them. I suppose it'd be quite good to touch on ones you made last year. I included Breezy HR and really moving into that kind of talent management and recruitment side of the business. If you want to talk about that and how you might see that developing, and then also about your most recent acquisition, which was Open Lms, and the opportunities that might give you.
Sure. So if I may go back, I'm going to go back 2 years to May 18, where we bought PeopleFluent. That was our first step into talent management. It was a large acquisition, largest we've ever done. And we said at the time, we recognized that it had an excellent range of products, but there were two problem products. One was its learning management system, and the other was its recruitment system, or otherwise known as applicant tracking system. And we were unconcerned about the learning management system problem because we had an excellent one in Net Dimensions, and we have indeed now converted almost all of our PeopleFluent Learning customers onto the Net Dimensions system. That's now called PeopleFluent Learning, by the way. So that was a success. We recognized that the recruitment software needed some work, and we anticipated that even with the best will in the world, it would take about 2 years of development effort to get there. So we set about seeing whether we could acquire a business that not only would be a great business for the group in its own right, but would bring some speed to that software development and close the gap. And we were delighted to find Breezy. The reason Breezy was very appropriate is it addresses a different market. It's small and medium-sized businesses, mostly in North America, but around the world. And it has a very nice self-service platform, but it's a fantastic mobile engagement platform. If you think about it, people apply for jobs now on their mobile device, and all their candidate engagement is done via that. And this brought that an excellent mobile interface. And so we've grafted that onto our PeopleFluent recruitment solution, and that has improved that. And in fact, now we're in the middle of doing a full rewrite of that solution using the Breezy platform. But also Breezy has been an exceptional business for us last year. I'm so disappointed for them in terms of what the virus has done to them, because naturally people are not hiring at the moment, nowhere near as much. So they grew by 60% last year. It was our fastest growing business. This year they won't do that for the obvious reasons, but we are confident that they will continue their growth tear next year, because you know, everything suggests that when we do begin to see a recovery, there will be a big pickup in recruitment. Particularly in the small and medium sector. So that's Breezy, and they've been an excellent addition to the business, bringing some very rapid and agile software development techniques as well. So they've been good in every respect. A complete contrast is our acquisition of Open Lms, and they say in life you need a bit of luck and timing at times. We bought a business that we completed on April the 1st, so just as we all went into this crisis, that addresses predominantly 2/3 of the customers are the higher education sector, and that university sector has gone into real challengings, because rather than having a model that's mixed where they have lots of students on campus and there's a bit of remote and digital learning, it's obviously inverted completely, and their systems have been under quite considerable strain. And we have a very resilient, robust platform, and we use with a common open source piece of software called Moodle, which is used by oodles and universities all around the world, and we have been picking up challenging situations for them and helping them. So the business is extraordinarily busy, literally just on the cusp of buying it. I'll give you one example. We have just signed a deal with 19 universities in Spain, where they put us through some really heavy technical testing last week. And this transaction has happened in about 10 days, where they have to test 800,000 students between now and the middle of July. And they were very worried about their platform holding up to it. And they pushed our platform through some fairly heavy, what we call load testing. And we've won that contract to do that testing over 3 months. That gives you an idea of one of the robustness of our technology, but also of the market at the moment. It's extraordinary.
That is extraordinary. So that is quite fortuitous timing then, I guess, or baptism of fire, either way. I wonder, what kind of acquisitions are you looking to make in the future, and what's the environment like for that?
It's evolving. I think valuations naturally are going to change. We're not rushing at anything, but there are an enormous amount of opportunities emerging, and we are excited by those. I think what I've said to my team is that, and to advisors that we talk to in the market who are there scouring the market for us, is that allow ourselves to be more open-minded and unconstrained about what we would consider. So those wonderful competitors that we've always considered to be off radar for us because they're too big, or they're not available to us, we're now taking the view that anything is possible. I'm very excited by the opportunities that these sorts of reset buttons create. We've been a consolidator of 9 businesses so far in the last 6 years, including being willing to take on some fairly gnarly turnarounds, and done, I believe, demonstrated that we can do that successfully. And so I think we're incredibly well positioned, both with our experience and with our balance sheet strength, to be able to look at doing more of those going forward. And I think there will be both a mix of organizations that are flocking towards scale and strength, which we have. So we're having a number of conversations with organizations in that regard, but also there will inevitably be some distress out there. I think that model where you've grown at any cost, and it's just been about top line growth, but ignoring profitability or loss completely, I think that's becoming an outdated and unsustainable model now. We're very interested in some of those businesses that have operated in that way.
And do you think they might have a better sense of they might have come down to earth a bit in respect to the valuations that they were looking at, because so many things are being looked on multiples of sales, and sales, as you say, at any cost, without actually having to deliver much on the EBITDA line?
Maybe. I think when we reach our cold winter of discontent, Anna, in 6 months' time, maybe it'll be a bit different then.
Yeah. Okay. And are there any regions where you feel that you're a little bit light that you'd be looking to grow in?
I can honestly say to you, I think there's such a runway available to us in Europe and the US, and obviously business is easier to do in those territories from where we're located. That's not to say that we wouldn't consider Far East Australasia, and indeed we, through our Open Lms acquisition, we do have capability now down in Australia, but we're not chasing that territory. If it came as part of an overall acquisition, then that would be very interesting to us, but it's not something that's on the roadmap, as it were, for the time being, simply because, you know, I think we have to be respectful of management bandwidth. I certainly have no intention of organically growing a business in new territories. We will acquire established if we're going to do it at all.
Okay, great. Right, well, thank you very much. Thank you for your time. It's been very interesting, and I look forward to seeing you again soon.
Thank you very much.
Thank you.